What's up? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily live stream. My name is Kellam. Welcome to the show. We do this every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. But I want to point something out. We try to make it our purpose, not just to tell you exactly what's going on in the charts for this moment. The whole purpose of this stream is to bridge that gap from beginner to pro, to where we do cover a ton of alpha on this show, a ton of alpha on this channel, but we also always try to make sure that we're throwing that rope back to people that are beginners so that we can keep people engaged from beginner to pro. If you're not understanding something, we take periodic breaks throughout, and sometimes we're just describing support and resistance. Sometimes we're talking about fibs. Sometimes we're talking specifically about price targets, but not just what they are. How the heck do you find these price targets? Because we don't want to just do it for you. We want to teach you how to harvest your field, not just give you the fruit. So without any further ado, we have an excellent guest lined up for today. Today is March 8th, 2023. Yes, it is true. We are living in the future, and you are part of that being here in the crypto ecosystem. So shout out to everybody in chat. If this is your first time here, if it's your last time here, if it's your only time here, it's all good. We're just happy to have you here. Please hit that like button, hit that subscribe button, and ding that little bell so you can get notified that you can come and join our community and join in on this basically explosion and revolution in personal finance, financial sovereignty, and figuring out how we can dominate and be a part of the biggest impact on our society within technology that we've ever seen. So without any further ado, let's go ahead and jump right into the show. We don't need to do a long intro today. We're going to welcome on our guest, Mr. Crypto Burb. How are you doing today? We've got him on the stream. Everybody let us know if there's any audio, visual, any issues, or if you're just freaking excited, because that's what I am today. I'm happy to have him on. How you doing, good sir?
I'm doing good. I've been improving over the past couple of days from a little bit of, I don't know, cold or something that apparently attacked my throat, So I'll do my best not to blow up the microphone with my cough, something on the way. I'm really excited to be on the show. Looks to be pretty well prepared and well exciting.
Yeah, man. Well, and I'm super happy to have you on. You and I have I think everybody that's been in this space on the media side of things, for anybody that's watching that may wonder how this works, all of us, whether it's Crypto Burb, myself, BitBoy, Frankie Candles, Tom Crown, Scott Melker, it doesn't matter who they are. We're not only talking heads up here, talking at cameras, trying to talk about what we know. We're all in this together. We are learning along the way. Many of us, most of us that are actually doing these streams do have years of experience, not only in crypto, but also preceding crypto, whether it be in economics, in finance, and traditional asset trading, entrepreneurial efforts. All these things sort of tie together. And one of the most beautiful things I find about the crypto ecosystem is it brings renegades from all factions around the world. And we're able to utilize this variety of different skill sets and how we can apply them and understanding what's going on with crypto and how these different aspects of blockchain are absolutely going to permeate and revolutionize every aspect of our culture. So with that being said, Crypto Burb, do you want me to refer to you as Crypto Burb? Do you want me to call you by your God-given name, Mr. Adrian? How do you feel about that?
I feel pretty good about you calling me Adrian. It's fine.
All righty. Well, give us, before we jump into some charts and to see kind of what's going on within the ecosystem, if you could just give a sort of brief outline as to what was, it doesn't need to be, I know this could be a 10-minute or a 10-day sort of a short form content here, long form content, but give us a sort of brief rundown of where you came from, how you jumped into your journey in crypto, and what you're feeling about what's going on in the market now.
Good question. Good question. What I love about coming to the shows with you, Kelly, is how constructive you are, how positive you are, you know, and you definitely deserve so much more recognition for what you do. So I do appreciate this opportunity to praise you. You know, not many people are really so transparent and so pure of heart and soul to dedicate their time and skills just the way you're doing. So well done on that to start with.
Thank you for that.
In what regards, yeah, you're welcome. In what regards my story, you know, many people will probably, again, will probably think that, you know, it's some extremely interesting stuff. You know, I would say, you know, everybody's lives in it. It's in their own way interesting, right, and unique. So I'm not the day trader, right? So I'm not. I'm going to disappoint maybe many people, you know, who would imagine that I'm this type of a guy that sits 24/7 in the basement, you know, just having 50 split screens, you know, with the 50 different charts every second. That's not me, right? For trading, I use my MacBook. I'm pretty good with that. I mean, I don't really care much about being, you know, settled somewhere in like a, you know, physical trading floor and an exchange, right? Being on this, you know, outcry kind of like a model. So I'm just chilling, you know, while trading. Trading is super boring. It should be super boring, right? Because you only click on a sell or buy button. Like, what the hell is exciting about that, right? Anything else that we just give in the context to it is our biases, is our opinions, as and also noise, right? Which distracts you from what's really important. And this is the more we kind of like try to overlay, you know, this context of buying and selling you know, to try to make trading spectacular and thrilling and full of adrenaline. You know, this is BS, right? This is BS. This is misleading. It's going to take you in the wrong places. So I think that the biggest misconception that I had about trading myself, that I think many people also kind of like associate with it, is that I used to believe in my early training days that trading was, you know, fireworks, that it was exciting, that it was full of fire, and it was a battle, and every day you would wake up and you would just be, yeah, let's crush this, let's do something crazy, right? Let's
Every
go mad.
trade should be
So,
profitable, right? No.
yeah, exactly. So that's not how it works, right? In the movies, perhaps yes, right? When you Google the picture for an average crypto trader, perhaps you'll get this stereotypical picture, you know, of a guy pulling out the hair just like I did, you know, in front of the computer screens and just crying mad, you know, about buying and selling. So that's not the reality, right? That's just some sort of like a disturbed, deceiving picture of idealized situation that otherwise is boring, right? So over the years, I have been gaining experience, you know, and learning. And the learning is, I think, the essential word, right? It's very often misused, or it's very often overused, right? However, by learning, I do mean, you know, collecting the books, reading the books, and going, you know, from my charter market technician kind of like a path, you know. So it's more about discovering myself and my position, you know, in the world and in the market, and understanding that I'm completely irrelevant and my opinions don't matter to the market. That whatever I think is not going to move the market. Right? At times we would have this illusion of control, thinking that when we buy, you know, perhaps we'll help the bulls and the bulls will fight back, you know, and we will win the war. That's bullshit again, right? So there are so many biases, so many traps on the cognitive side, on the emotional side, that would just fully trap, you know, us as traders. And I've really committed many years to learning how to avoid those traps, or how to answer those traps. Right? Not every, like, the emotions are by definition spontaneous, so we cannot much control them. Right? You can only control the result. You cannot control or plan the way you're going to feel in a year from now. So while trying to manage and to, you know, reduce the impact of the emotional biases and errors that we will make, like this loss aversion, that we would sell before the resistance or buy before the support, right? or some sort of like a regret bias, recency bias that we would see, representativeness bias for drawing, conclusions out of small sample. So many traps. Some of those can be learned and improved over the years, and those are the ones that I, have committed to learn, to understand, and to try to minimize. And the emotional side to it, right? So you can tell I'm pretty flat, in the way I talk about trading. I'm not really much excited about that anymore, and I'm really glad, because that's exactly what I've been fighting for, over the years. Maturing to this level is is freeing up your mind for sure.
No, I mean, I agree with that wholeheartedly, and I think even with when I'm trying to building out, we have this whole not only BitLab Academy daily live stream, we also have the paid members BitLab Academy, and one of the things that I struggled with or tried to contend with very heavily is trying to take that step back, not just, okay, we're teaching a basic candle pattern. Well, when we're trying to really, my whole goal is, and I think your goal and a lot of people's goal is, when we're doing these media forums, whether it's on YouTube or Twitter or wherever the platforms are, is to provide access points for people as they enter the crypto ecosystem, so that they have healthy education that can help them navigate this properly. And I've talked about it here on the stream before. If somebody new enters a space and they're very excited about it, and then they don't understand risk management, they don't understand how how to understand price action or chart movements, and they end up going all in because they heard some influencer talk about the coin, and then the coin gets rugged and they lose everything. That doesn't just hurt them, that hurts basically every single person that they can talk to that may have been considering coming into the crypto ecosystem. So the fact that we can have these platforms and discuss things and discuss tools and pitfalls that people fall in, and provide the framework for people to navigate healthily, will actually, in the long run, truly be one of those building bridges to help develop healthy adoption over time, because people can navigate. You see people making money, you see people understanding how to utilize and balance a portfolio. So with that being said, I really appreciate that intro and understanding with where you're at. And it's a battle that I struggle with on, I'd like to say on a daily basis, but sometimes it's on a per minute basis. When we're looking at the charts like today or yesterday when Jerome Powell speaks, or if there's PCE data coming out or CPI, there's always going to be an excuse while there's volatility. But the truth is, as you mentioned, if we look at it more agnostically and not be married to the asset that we're trying to buy or trying to build wealth on, or if we look at it, okay, what is the data saying? Because and let me know what your thoughts on this. The way I look at price action is, I sort of broken it down into this concept that I'm no longer looking at the price movements on a chart. What I look at it as is each candlestick or each bar is a representation on that time frame of the battle between the bulls and the bears in that specific time frame. So therefore, when you're looking at price action being charted across a chart, you're looking at a visual representation of the psychological battle over time. So is the bullish narrative dominating, or is the bearish narrative dominating? Is there fear dominating, or is there hope dominating? And utilizing that sort of understanding has helped me identify my own sort of bias sometimes. And I mean, I'd say at least twice a week, I'm at my trading terminal at the desk, about to put in a trade. And I'm like, wait a minute, I am responding to all this emotion that I'm seeing in the chart and not responding to the data that I have present that can inform me of a better decision. So what are some of the ways that you sort of help navigate that within yourself? Whether it's having a plan, whether it's a certain strat, what's something that helps you sort of stick to your guns and execute in the way that you're intending, rather than being held hostage by emotions?
Very important point, Kelly. There are a couple of things, I would say. It definitely helps if you get to know yourself, right? However populistic and irrelevant it may seem, by learning and then like I said, discovering those different aspects of technical analysis, you do learn about psychology in the core, and you do learn about yourselves, and you start noticing certain patterns and certain behaviors, and at times dumb assumptions that we all make, and it's and it understanding that it's all irrelevant and that it's all kind of like our brain trying to put it all together just to make it look like it makes sense, is very deceiving. So I would argue that working, to the very core of the reason for why technical analysis works, it's going to be the understanding the depths of the psychology to it, right? I'm not a psychologist. I'm not a psychologist like from a profession, I did completely different studies, like the chemical technology.
Oh, it looks like there we go. No, you pause there for a second. Yeah. It's all good.
Okay. So what I was saying is that
you must have been saying something. You must have been saying something really good. So the universe paused it for people to really tune in here. Yeah.
Might be so. So what I was saying is that me graduating from completely different studies and fields, like chemical technology, engineering, and management, and the finance and so on. Only after the time I did really understand, my own behaviors of how much noise and how much complete nonsense there is, in my way of thinking. And so I think one of the biggest wins that I learned over the years is trying to separate trading from judgments, from opinions. I used to, of course, this used to be one and the same thing for me, because otherwise, how can you not trade based on your opinion, what you believe, right? So apparently, that's it. This is so-called discretionary trading based on opinion, based on discretion, which is most of the time biased, which is most of the time noisy, chaotic. And, I've recently read this very interesting book by Daniel Kahneman about noise, about how much noise there is in the world, in the human judgments, where the measuring instrument is human brain and human mind, and how much inconsistent we are as people and making one and the same type of judgments. This book would tell you about the doctors who would prescribe different medication to the same people depending just on their mood or the weather outside of the window or the time that they visit into their office, and there's like so much noise, so much inconsistency that is often disrupted and changed by such innocent things like I said, like mood, weather, temperature outside, or even your experience. Let's say there is also a judicial kind of like a system, like this entire thing about the professional judges in the courts, how they would also sentence people differently, not necessarily based on their sins, if you will, on their wrongdoings. More so, they would often decide about how much of resemblance there is between the sentenced people, and their own daughters, for instance, right? So
yeah.
This book just made it very clear how much noise there is and how much irrelevance there is in our judgments and in our opinions and how faulty they are. And apparently following a set of very system rules, just eliminates this noise. So that's the real thing, about trading, and not relying on the judgments, which are noisy, which are biased, is by definition already a huge improvement to the quality of the judgments, which directly translates to how much win you get in trading, right? So long story short, and I would say that learning about those aspects, those depths of the psychological approach, of the biases or the sources of noise, trying to improve the quality of judgments helps in trading. So this is one thing, right? If you are a discretionary trader and you really want to trade on your opinions for some reason, then at least you want to do it right. So you want to have pure quality of judgments. It's never going to be ideal. However, your job as a discretionary trader, who, for instance, evaluates chart patterns or head and shoulders. If it's a head and shoulder, consisting of 23 candlesticks on the daily time frame, and if this is a textbook example, then what if it's a head and shoulders consisting of 22 candlesticks instead of 23? Is it still head and shoulders, or is it some sort of like a different pattern that is just similar? And so on and so forth, right? So eventually it all comes down to something that is taking away the discretion from us, which many people don't feel comfortable with, right? Because we choose to believe that we are invincible, that our ego is right, that we have this, that we maintain this idealized picture of ourselves in our heads. And it's just this ego defensive, situation that we have, right? We try to defend our own ego and to never admit the wrongs and the mistakes. However, it's very deceiving, right? So our job is to try to eliminate and reduce the noise, reduce this inconsistency in trading by following clear guidelines, following clear rules, otherwise known as trading systems. And a trading system is this set of strict rules that tell you about, well, if we are to put it in the frames of so-called turtle trading, trend followers, for the type of a market that you want to have trade, right? There are like 6 factors. First is the type of a market that you want to trade. Like it's very difficult to, to go and trade, split your attention to like 50 different coins at the same time. So what I would do is typically I would choose 1 or 2, right? And I would focus my attention there. Then you want to decide about what is your position sizing, right? Well, how much risk you can really take and bear. Some people would go and blow up their accounts in casinos overnight just for fun, and the other would feel of not losing a single penny, right? Because they got harmed in the past or something. So there is a whole spectrum and variety in terms of the risk preference attitude, and it's also upon individual preferences there. We want to decide about our entry and exit strategy, right? What defines our entry trigger? What defines our exit trigger? What is our tactic? Is it a trend following system? Is it a mean reversion system of range trading? Do we buy or sell based on the chart pattern breakouts, right? Do we based on the CPI prints and so on and so forth? And finally, you want to be aware of the protective stops, right? And those protective stops enable you to learn or to apply those risk control. Without risk control, it's impossible to be profitable in trading. Mainly because without risk control, you rely on luck, right? And this luck can work work in your favors and can work against your favors, because eventually, this so-called theory of runs tells you that statistically it's less and less probable and likely that you're going to get guessing right? If you roll a dice, or if you I don't know, play a roulette, right? Then the chances will continue eventually. If you want to have a string of 5 black fields or 5 red fields, and it's going to be decreasingly or I should say it's going to be increasingly more difficult to shoot at, to just draw 10 blacks in a row in a string. So all those things, concerned, it's impossible to keep guessing right? It's impossible to keep winning the lottery all the time. And risk management, with the help of protective stops, with the help of deciding how much, based on what you're going to set your protective stop. Is it an average volatility? Is it some sort of like a technical support level? Is it moving average? Whatever that is, you have to have your protective stops. And those set of six factors, is something that we know as trading systems. So those 2-3 elements are very essential to combating that. First of all, learning about the biases, getting deeper and deeper, diving into your own psychology and your own understanding your own self, knowing your reactions to different and behaviors to different situations, knowing how skewed you are, how deviant you are in terms of what you plan to do. Then really understanding and improving, the quality of the judgments, right, to reduce the noise. Then thirdly, following a strict regime of trading systems this is, I think, like a simple trio to kick off, the journey towards profitability, if it makes sense.
No, yeah, I completely agree there. And I had I don't know if it's a benefit or a detriment. At the end of the day, everything that we do in this market, winning, basically winning trades, or even more so, I would think losing trades, acts as something that informs your ability to grow in the space or more quickly move out of the space. I lost about $70,000 in about 2 trades doing leverage trading just years ago, because I had, I lacked something that whether anybody here is watching religious or not, I think we can all believe that humility is something that we can all practice more of. And I thought that, man, I was a trader. I was so good at trading because I had done like 80 spot trades that were profitable. And I didn't take into account that it was also 2016 into 2017, where basically, you're going to win nearly every trade you make unless you're completely counter trading the bull trend. And so I thought, you know what? I'm going to be a millionaire tomorrow because I'm going to leverage trade now because I'm such a good trader. And I didn't understand the difference in how I had to readjust and reevaluate what my risk management strategy was, how you need to have a very, very strict sort of set of standards for entering, because you can enter a spot trade and have a lot of leeway because your asset might go down, but you're not going to be liquidated. If you're on leverage trading, and I really want to recommend to people in the times in the market where we're at right now, which is not technically, we have not established a bull trend. We've had a bullish impulse. We are in the hardest part of the market to trade because the market is doing everything it can to shake people out. And so when I started leverage trading, within, I think it was about 2 or 3 trades, I lost, $70,000, which at the time, that was the first time I'd ever even had $70,000. So my greed stole money from me because I didn't practice a good strategy. So with that being said, I do want to jump into some of the stuff that's going on now in the markets and sort of to kind of get your perspective on, there's a lot of choppiness going on right now. Everybody wants to define that we have a bull run now because we broke that massive downtrend resistance and we found support on it. But as we all know, the momentum is not followed through. We're seeing stuff, and by the way, crypto Burb or Adrian, I'm not sure if you're going to be able to see this on your end, but I can talk through it. Looking specifically at, let's kind of come over here. Looking specifically at this chart that I already spoke with you about this as well, Adrian. U.S. government estimated balance. Basically, this is the addresses identified where they've been holding a lot of essentially seized Bitcoin. That a lot of it came from the Silk Road, and there's been a massive sort of move from those address wallets onto Coinbase. And of course, what is this sort of lining up with? This recent sort of downward price action. In addition to that, we've got this is something next. In addition to that, we also have we do have some positivity coming in at the same time. We're having FUD and positivity coming in, where judges expressed skepticism on the SEC distinction between Bitcoin spot and futures pricing, which is, things are lining up. Everything, not only the markets being choppy, but the FUD and the positive news coming out right now is not giving a clear indication as to what direction the price is going. I also shared this chart. You may have shared it on your page as well, but it was basically an on-chain data chart outlining the difference between the behavior between weak hands and strong hands, basically long-term holders being strong hands, short-term holders being weak hands. And we could see clearly on this chart that I marked up that there was a lot of long-term holders taking profits, basically reducing supply into this previous peak that we found a lot of resistance at 25K. So with that being said, those are the charts that I just wanted to sort of highlight for a moment. But I wanted to get your perspective, and if you're willing to pull up some charts on your side, what you're sort of seeing playing out right now, on Bitcoin, maybe Ethereum as well, but we can focus on Bitcoin. and how you're sort of seeing potentially even March may play out. And with the caveat here, I forgot to mention earlier, you acknowledged biases earlier, and knowing thyself. We cannot grow and we cannot move forward in any aspect of our life if we don't know thyself, if we don't know what our problems are, if we don't know where our struggles are. And with that being said, as bullish as I have been in the past, as bullish as I even am right now, I do think there's a pullback coming. And I just want to highlight to everybody, no matter what direction you think the market's going, I would really encourage, if you think it's going to be bullish, spend an hour plotting every bearish scenario before you start looking at the bullish scenario. If you think it's going to be bearish, spend an hour plotting only, so you have a wide and a cultured view on the market and the potentialities, so you can plan for both directions. And that's sort of what I wanted to share. And I'd love to see some of the charts you have and what you're looking at with the markets.
Mm-hmm. Let's get it up and running. Can you see it?
Yeah. And your face is beautiful, but I'm gonna shrink your face just a little bit so we can see a bit more of the charts there. There we go.
Please do. So there are a couple of things that I wanted to make sure we are all aware. Of course, in technical analysis and in the life, we are all living in a fractal world where there are lots of subcomplex natural kind of like formulas, as in the coastline is smooth only on the map. But however, the closer you get to the more you zoom into the coastline, the more shattered and irregular it's going to be. Same goes with the trends. So trends are fractals. They consist of smaller tides and bigger tides, So it's there. Even if there is like a primary trend, let's say defined as the 200-day moving average, the primary trend telling you, it's a bull market when it climbs up, or it's a bear market when it goes down, it will consist and often deviate against those main narratives. So typically when having an upward trend, right, you're going to have a look at the secondary tides, which are consisting of 3 impulse tides, right, in the direction of the primary trend, and 2 corrective waves against the contrary trend, which could be used to some sort of like re-enter, and those smaller tides, were also shattered, like I said, like the coastline, it's going to be shattered by some tertiary fluctuations that are called that is noise, right? That is just a random movement that is not having much technical sense, right? At times, the prices will just move flat, just like Bitcoin had over the past couple of days. The prices will move flat, and it's just going to chop around, right? It's just going to knock off stops, on one side or another side. However, it's not going to be consistent. It's not going to be informative. It's going to be random, and that's on lower timeframes when you kind of like want to dedicate more to gambling, as in that martingale, Sante martingale strategies that will help you, just take those chances, the odds, the way they are, right? Those are more efficient numbers. When there's randomness in the market, so-called random walk, the markets are closer to efficiency because people can assume, certain things, and there are like 50 odds that is going up or down. So you can react to it just the way you would play the roulette. Otherwise, on the higher time frames, there are some larger tails that develop, right? So imagine you have these flat numbers, flat price action, and eventually it's going to pop out in one direction. It's going to come and persist in this direction, right? Those are so-called trends, giving those fat tails in the return distribution. So our job, or the money, comes with the volatility, and the volatility increases along with the trends. So your job as a trader, technically, from the profitability perspective, is to wait for those longer tails to develop, is to get chopped, allow yourself to get chopped or stay out of the market, basically, right? And just load in when there is this trend emergence in either direction. And those, when you focus on lower timeframes, you lose sight of these larger tails, basically, because you do not see it. So applying this time frame understanding, applying this fractal nature, well, every trader can trade every second of a chart, right? However, is it really relevant for you? Is it really good for you, right? What I do is I trade those secondary tides most of the time, position trading in the direction of a trend. So let's say for most of the time, I stayed in cash last year. I only allow myself to get chopped in the sideways, right? Because this is where it would come with a lot of irregularities, like I said, a lot of false breakouts, false signals, on which I lose money. And that's what happens 70% of the time. So 70% of the time, I'm going to be wrong about my trades. However, for the remaining time, eventually, this major tail comes. This major tail allows, right? Because this is the inefficiency of the market. And that's where the biases, are trend promoting or trend prohibiting, and what happens is I get chopped in here. However, I position myself in the direction of a trend when it bursts, right? The primary trend, the primary narrative regime is to the downside for 2022. It's changed already, right? You can tell that just based on its 200 moving average, the primary trend representing the bull market or the bear market, it's not representing the bear market anymore, right? So when we are talking about 200 days of data, we don't talk about accidents. We don't talk about noise. This is like 200 days. This is a lot of time. So those averages, accounted for 200 days, they really have a lot of time to digest and a lot of information to digest. So that when it spits out the result of this moving average, you can tell that it's a credible, reliable information that comes out. Other than focusing on all those tiny little wicks, and shadows that are irrelevant. So being a trend follower, I trend breakouts. So my job, like I said, is to allow to myself to get chopped in the sideways, get chopped here, get chopped here. Every time that market moves sideways, I get chopped and I lose, right? However, my job is to wait and allow to myself to wait for those larger tails, right? I wait for those larger breakouts, and until they finally, or after they finally come, they recompensate for all those small losses that I haven't experienced. So long story short, what I see in the market is that, let me just maybe make it bigger. I don't know if it's going to turn bigger. Anyway, so right now we are moving somewhere in the local sideways environment, so which is why I got stopped 2 or 3 times already, right? I was riding the trend from 16,900s all the way to 22,800s, if I'm not mistaken, at the end of February month. Start of February, early February. Then I would re-enter, a couple of times whenever I would get those fake breakout signals, and I would lose on that, right? However, because the losses are kept small, I'm just kind of like chilling right now in cash, right? I'm not touching my long-term investments. However, for this main trading strategy, trading system that I've got, is I'm waiting through to let itself unclear. Again, regardless of my opinion is that it will eventually go up. However, I don't really care. I'm positioned, on the sideline right now because that's what my system tells me, right? So having an opinion in trading is completely different and separated. What I would say in terms of the forecasting, like I said, the average extracted from a large sample of data is a good representation of something that we know as an estimate or a true value, right? Or as a good estimate of a true value. That's what I meant to say. So we know that this average price of Bitcoin around $20,000 represents some good number, represents some credible level. Plus, it's a psychological kind of like an anchor to it because it's a round number. So people love those round numbers because they are easy to remember. It's so much easier to remember 2 and 4 zeros rather than 2173.77. Right? So, which is why, of course, out of our own laziness, we would remember the most recent round numbers, right? Such as $25,000, such as $20,000, such as $30,000 eventually, and so on and so forth. So, in terms of the forecasting and relying on the long-term data, I know that the long-term trend has shifted. It's not the bear market anymore. And people who got stuck in the bear market, are suffering from something that we know is a cognitive dissonance. and cognitive dissonance, which tells us to discount and undervalue the news conflicting our previously held views. Our previously held views when we were stuck in the bear market thinking are that it's a bear market, right? However, the reality has changed, not because I say so, but because the trend has changed in angle, right? And it's not some random movement, it's a 200-day movement. So the trend has changed, and it's changed and it started sloping up. It started kind of like just moving a little bit more sideways. For sure, it's still, however, it's not moving to the downside, which is what makes me think that, we're not in the bear market.
Let me ask you a question here, though. I'm not sure. I'm going to annotate on the Zoom. I think other people should be able to see it as well. But how do you contend with? Of course, we have this this sort of line that is the 200-day moving average. But when we're talking about contending with moving averages as well as patterns within a trend, I try to always reference everybody, because everybody always has these arguments of whether we're in a bull trend or a bear trend, and very few people identify what time frame they're talking about when they're having that argument. So in this case right here, we have this pattern where we've got this sort of broadening wedge that has developed, but within this broadening wedge, we also have a descending wedge right here. With, of course, we have the 200-day moving average, which is essentially right in line with where the just about basically regionally right where the CME gap is below us. And that's also just above where the short-term holder cost basis is, as well as the long-term holder cost basis. So this sort of level right here, the 19,600 to 20,500 region, seems like there's a lot of pressure, a lot of magnetism to it, also in combination with the 200-day moving average. But how do you contend when you're looking at a chart like this, and we have this sort of broadening wedge as we have, but this pattern right here being a descending wedge, which traditionally does break out bullish, but we have all this magnetism below us? Is this just something that we sort of have to contend with, as what we were talking about earlier, with this nature, this portion of basically, any sort of market cycle, you have, your W sort of formation or triple bottom, whatever, push up, pull back, push up, pull back, distribution top, breakdown, relief rally, breakdown, relief rally, and then the chop at the bottom. This is when everybody's losing so much money in this region right here. How do we contend with where we're at right now, with having such conflicting bullish and bearish sort of data? If somebody's just a pattern trader versus looking at moving averages versus looking at CME gaps, how are you weighing that in terms of getting not a personal bias, but a data bias as it relates to coming down? Would it be more so because we have this massive momentum move that we have here, obviously a much smaller momentum move following a key level of resistance right above us, with this huge magnetism below us, so we sort of ignore some of those intra midterm and more local trends here and just focus on that magnetism below us? Or do we just, as you said, is it more proactive to sit somewhat on the sidelines and let the trend determine itself? What's your sort of plan in that regard in this sort of setup?
Mm-hmm. Good question. So my plan is to follow my system. Whatever my system tells me and dictates me to do, I'll just do it. Right? If it tells me to go long somewhere above 23,500, I'll do it. If it tells me to stay on the sideline until Bitcoin reaches $20,000, I'll do so. So, like I said, I completely do separate my own opinion and my own discretion from trading, and like I said, I'm thinking that eventually it's going up, right? However, I'm on the sidelines and it doesn't conflict. So what I know, like I said, of course, we are doing a little bit of forecasting. So there is a limited, like I said, quality of judgments always, and bias and so on and so forth. So take it with a grain of salt. The way I look at it is, I know that the trend has changed. So it's not a bear market anymore. As simple as that. So if it's not a bear market, then what else is it, right? So typically after a bear market, you would have this short period of accumulation or whatever, leading eventually to a new bull market, right? And the question is how you kind of like decide what a bull market is. I measure the bull markets between or the cycle is overall measured between the troughs or between the peaks, right? So it's a bear market. It's a bull market from. Hang on, let me clear this. It's going to be a bull market. Let me do this real quick. When you take the sample of the last two troughs, right? Let me just give it a different chart, maybe.
Oh, and can I share
From the
a
BLX,
trick?
I think it's going to be a good one.
I'm hoping you don't know this, because when I learned this the other day, I felt like such a dummy for so long not knowing this. Hopefully you do know it, and if you don't, gift for you. If you put your mouse on the chart, especially when it's on auto, if you have a Mac, I don't know what it is on PC, it might be Control, but if you have a Mac, if you press Command when you zoom in on a chart, it keeps the chart specifically exactly where you're at and expands and collapses it even within the auto mode, so you're not having to scroll back and forth. When I learned that the other day, I was like, man, I just saved myself 4 hours of frustration over the last 3 years.
Thanks so much. Good tip. I didn't know about that. Thanks. So back at it, I know it's not a bear market. In fact, when I look in the past, of course, it's a limited sample because this could be just a fifth bull run, starting. So it's not much of a sample historically. Bitcoin is young in its history. However, all the same signals that preceded each and every single burst, going like 10, 20x or something, or even more, the same type of a signal is here, right? Signal meaning the breakout after above the 200-day trend, following a bear market. So that's exactly what we've seen, right? And so far, each and every single instance of that has defined it as a new bull market, right? Technically. And otherwise, you measure the, like I said, the bull markets or length of the cycle between the peaks, right, or troughs, right. So by trying to understand not when the bull market ends, but when the bull market starts, I would argue we look at the bottoms. So it's typically driven and accelerating, of course, towards and through the halving. We know there's halving in last year and in the next year in March. So typically, until the halving comes, the market would have already traded a lot to the upside. Naturally, it's a fundamental scarcity builder. And besides, when we measure, like I said, the bottoms, just mark the bottoms of each and every single cycle, well, we're looking at exactly the same pattern, right? And it looks that we've got, despite it was shorter, despite it was kind of like less expansive to the downside in terms of the outreach, we are looking at the same pattern, right? So the market is not moving down anymore. The market has started kind of like going flat. So if I were to frame it somehow, right, each and every single cycle is going to be different. But if I were to frame it, I would say that we are it's kind of like a post-breakout moment, right? Regardless what it is. Perhaps it shoots up immediately to the upside. Perhaps it's a little bit more sideways. However, accounting for the macro environment, and for the fact that we're in the pre-election year, which over 84 years has been only once wrong, 83 to 84 odds that the market will go up heavily this year. I'm talking 20, 30% on average for the indices. So this creates a lot of bullish context and a lot of bullish environment for Bitcoin to grow. We've got the halving narrative. We've got a cyclical nature. We've got the trend that stopped moving down. To me, it looks like an early infant stage of the next bull market, right? However, whatever it is, I'm going to trade based on my system rather than what I'd say. It looks like an early bull to me, anyway.
So one of the things, I saw some interesting news posts earlier today when I was doing the nonstop research that I think all of us in the markets, seem to just never-endingly inundate ourselves with is, it's the speculation that we've had, and this is going to relate to the charts and potentiality, which I found out yesterday apparently is a very American word, but the possibilities of markets exploding. I think there's two things that people have been talking about excessively. I think it just draws back into the hope of, that exciting bull market to go. But, if anybody's looking at this chart that Adrian's sharing, we can see on this chart specifically that, let me kind of clear that, turn off I don't know how to turn it off. There we go. We can see that the majority of the market is not the parabolic uptrend. And that's what it's like. It's almost like, it's like an addict's like chasing the high sort of vibe. Everybody wants the parabolic uptrend. And the truth is, in order to really reap the benefits, as much as possible, you have to be able to endure the crazy long endeavored sideways action. I mean, look at this area right here. This was chopped for months and months and months. Even this period right here, this period before it right here, thought the bottom was in, and then the bottom fell out, the floor fell out from under it. And then we had still a couple months following that to reestablish trust and excitement and, make sure all the weak hands were shaken out. Long-term holder accumulation came in, and then we did get a parabolic run up, but then it was, it was a sort of pre-halving run, pullback, global economic shutdown, and then the true sort of parabola that was still somewhat truncated by a lot of just, global policy decisions and whatnot. But the reason I'm bringing all this up, one of the things people, I think, keep mentioning and they think is going to be the one of the catalysts for a massive bull trend is when the Fed pivots or pauses. And I think I don't think a pivot will necessarily cause an absolute bull run. I think that actually may bring further downside. I think a pause absolutely could. But the other one, and I've been seeing a lot of news about it in the last 2 or 3 days, is the speculation about when a Bitcoin ETF is going to arrive here in the US. And while I think that could be something, and I did a tweet about it yesterday, it could be something that has a very positive impact in the long run. I just want to caution people about when Bakkt launched. That was the top of the market when the Coinbase IPO launched. These major news events that everybody's just basically buying that rumor. When it actually comes to fruition, it has spelled, pretty large pullbacks afterwards. So just curious what your thoughts are on that, because I know the SEC has made some comments about, not the SEC, sorry, a judge has sort of made some comments about how nonsensical some of the SEC sort of limitations have been on spot ETFs for Bitcoin. I know Grayscale is suing the SEC. BlackRock is now also in the running to have a spot ETF launched. Do you have any, and I know you're a very data-driven investor and trader looking at what's playing out on the charts. Of course, the news is on the horizons for all these things, but what are your sort of closing sort of thoughts about that, moving in throughout this year and into next year? Do you think that this is something that is likely to sort of play out? And if so, do you think it's going to spell another sell-off event like Bakkt and the Coinbase IPO did? Or do you think it might be more tied to what the general narrative is at the time? And just like trading with indicators, is it going to come with other confluence that supports it? Like, what are your general thoughts on that with the spot ETF notions?
That's an excellent question, Kelly, and you're doing an incredible job pulling all of those questions. I don't know how to do it. However, I'll need to keep it short. It's in 4 minutes. I've got a meeting to attend. Yeah. So long story short, I do think that those are kind of like only points on the timeline, They are, in the long run, they are not much relevant, I'd say. I mean, perhaps some of those, yes, they may just bring some short-term turbulence. However, very rarely those types of major news events, are the ones that turn around the market, right? So unless there is like there's like some unpredictable black swan that just comes out of nowhere, like the war came up, last year, or COVID did, or some assassinations to like global leaders, presidents, some natural catastrophe, something like that can at times turn around the tables. However, most of the time it's just the narrative that people would build up, right? So I'd love to say that I'm excited about the ETF coming up, or the ETF not coming up. I really wish I could say that I'm excited. It doesn't get me excited at all, right? And what it does to me is just I take it as some sort of like an exception. Well, typically because news driven events such as FOMC meetings and so on are typically very random. There are no technical rules to it that would be profitable. It's basically historically 50-50. So if you buy and it goes up, then it's not because a person is a genius, but because they're lucky. And closing this windfall profit immediately is the best thing one could do. Otherwise, when some person buys and the market drops, most of the time the prices are going to pull back to the pre-breakdown level very soon. And typically it's recommended to hold on to it, unless, like I say, it's some crazy category of news, like dinosaurs are coming back to life, or Martians attack Earth, and there's like this global judgment day, whatever.
Yeah.
So unless it's this, Kelly, I would say, just to close it off from my side, I would say that it shouldn't be much exciting to us as traders. Of course, there's a lot of mass media love to pick it up because it sells, because it clicks. However, from the perspective of trading, from the nature of technical analysis, from the existence of trends, it's rather just a tiny little element that is going to be forgotten about the next week. And
it's
there's
almost
just not much relevance.
It's almost more so, and I hope people realize this. These clickbaity, exciting. When ETF happens, it will be exciting. But what I think newer, more inexperienced traders think is this is going to be the thing that it's going to rocket the price. And in reality, I think you would agree. I think this is a positive building block that will have large implications down the line, probably in the next bull run. Because once we get this out of the way, we shake some of the volatility out of it. The market gets reset, confidence comes back in, then the on-ramp can actually flow with healthy traffic rather than just sporadic inflow and outflow. But before you go, I do want to make sure that everybody knows you can go and find Mr. Adrian right here, Crypto Burb. He also runs the Burb Nest. You can find him here at crypto_BIRB. Really wonderful talking with Adrian today. Definitely go give him a follow. Check out his page. He's also periodically a guest on the podcast I do, Crypto Answered. He's an absolute wonderful soul. And I really appreciate having you here, Adrian. Look forward to having you back. If there's any closing thoughts that you wanted to share, or anything that you have coming up or that you're working on, you want to shout out, you can go ahead and do that now, and then we can close out.
Thank you so much, Kelly. Just wanted to, say that all the same positive vibe goes back to you, brother, and thank you so much for having me. You're doing an incredible job and definitely helping lots of people. So keep up doing it, and make sure people you follow Kelly. Definitely very great follow to your list, and making your day better. Thank you so much, Kelly.
Oh, I appreciate it. Everybody hit that like button, hit that subscribe button, ding that bell. Make sure you go and check out Adrian. Check out he's got his other links and stuff on his Twitter as well, which I threw it up on screen for everybody to see. And with that, Adrian, hope you have a wonderful week. Hope you keep trading positively and sharing your love, sharing your positive energy. There's so many trolls in this space. And then there's people like you that are just bring a bright light. You share wisdom and you share your journey, and I appreciate you. And that's all I got to say with you, my brother. I look forward to having you back on.
Thank you so much. God bless everybody. Bye-bye.
Adios, my friend. Man, everybody, that was a hell of a good show. I really appreciate everybody tuning in for this one. We didn't do a lot of charts today. We really talking conceptual trading strategy plan. Adrian is such a brilliant mind. He's got a huge community that he's a part of, and it's honored to have had him on. So definitely go and give him a follow. Again, that's at crypto_burb, which is BIRB. And with that, we got to wrap out the show for today. We'll be back tomorrow. We talked a lot today, so you know what? Get those ideas of charts ready. Throw it in the chat right now. What charts you want us to do? Let's set a record tomorrow. Let's do a bunch of charts. Let's break down some ideas about some price targets on a bunch of stuff. Throw it. You got 20 seconds right now. Throw in all the different coins that you want: Bitcoin, Ethereum, Cardano, AVAX, Crust, Optimism, the graph, Singularity. Let me know what it is you want to see. We're going to be talking about a bunch of stuff, basically charting out a bunch of things, showing you some strategies on how to chart, showing you some shortcuts, really helping bridge that gap from beginner to pro. I really appreciate all you. Make sure, if you haven't yet, what are you doing? Hit that like button. Hit it. Triple tap that like button. Smash that like button. Hit the subscribe button. Join our community here. We're bringing alpha, we're bringing data, we're bringing charts, we're bringing concepts. We're trying to bridge that gap from beginner to pro. And with that, I hope you all have an absolutely wonderful day. Happy hump day, everybody. Let's get it. Adios, muchachos. Thank you for coming. Thank you for being here again. Adios, muchachos. Thank you for coming. Hope to see you again and again. Adios, muchachos. That's it. Adios, muchachos. See you tomorrow.